Will another buyer try and outbid the $760 million stalking horse offer Harbin Pharmaceutical submitted for the bankrupt vitamins, minerals, and supplement retailer GNC? If you watched my video on June 29th, 2020, I'll pop up that for those that have not watched it. You likely already know my answer to that question, and I'm fairly confident that somebody is not going to come in and try to outbid that $760 million stalking horse offer. That being said, a collection of stock traders and stock analysts have kind of come up with a lot of different theories in terms of why they think that the GNC asset is undervalued and why they believe there's going to be this massive bidding war that's going to happen in the bankruptcy auction period. Now, while this video won't necessarily be just answering those questions or theories that they have, it will be addressing some of them and a lot more from my perspective, one that has spanned over a decade in the vitamins, minerals, and supplement category as a strategist for all sides of the industry. And this video will essentially focus on a few points. First of all, GNC's brand equity from a domestic and a global perspective. Also the GNC private label portfolio, what's that value? GNC's omnichannel ambitions, and just overall the future outlook of GNC. To help me add some depth to this video without making it absurdly long, I'm going to be providing a voiceover with my commentary and insights that follow along with a presentation deck that GNC submitted when they also submitted their restructuring support agreement and debtor in possession financing. All of that was included in a filing on June 24th, 2020. I'll also add the link down in the description for that specific document if you want to read that. On this first presentation slide, this is just a general overview of GNC up to this point, also just some company highlights. For those that are following my channel, I'm assuming you've seen one of the dozen or so videos that I've done on GNC over the last couple of years. So this is just kind of an overview statement. Now moving on to the next slide here, this is just kind of talking about the evolution of GNC. You guys can see from 2016, they had 3,513 domestic corporate-owned stores. Over the last few years, that has shrunk from the store optimization plan that they announced, I think at this point, probably close to 18 months ago. Now you're at store count of 2,902. That does not count the announced, I think, 800 to 1,200 stores that was a part of the bankruptcy process. But they also kind of just talk about some key events here and also just give you an overview of the key strategic initiatives, which is focused on stabilizing the U.S. retail business. The domestic retail business at this point is 88% and trending higher of the overall revenue base. You also have digital growth and just what they're calling personalization. That's around some of the marketing, then also a cost savings initiatives that has been going on for the last few years, and then also around international growth. From a few videos ago, we did go over the Q1 2020 financial results. It was not the best quarter that GNC has had recently. The revenue did decline as they had some issues with store closures that happened in March due to COVID-19. Also had some store closures just from the store optimization plan. There also was an effect to international business for the same reason of COVID-19, but they did see a bright spot in e-commerce that increased 25% year over year. And also in March, when some of the closures started to happen in their stores, that number jumped up to 61%. Just continuing on with some of the commentary on the Q1 2020 earnings, they did just kind of talk about some of the store closures. 1,054 of them closed in the United States at the end of March. A lot of those were from the mall locations. I think around 800 or so of those were from there. But because a lot of the local governments decided that they were going to supersede the federal idea of what was an essential retailer, there was some local governments that also closed GNC locations. GNC kind of goes on to talk about some of the response with COVID-19. They said this was an unprecedented economic disruption. I don't think anybody would disagree with that. There was close to about 1,200 GNC US locations that were closed. They quickly tried to implement as much new processes to help with alleviating some of those store closures, be that curbside pickup or some of the hyper-local fulfillment, which they started to roll out in the last couple of quarters. They also talk about some of the human capital costs that they limited with the large amount of furloughs that happened across the organization. Looking a little bit further into Q2, they did provide a little bit around what April's month-to-date performance is having. E-commerce has been a big part of that, up 122% year over year. But as you can see, the store revenue for the US corporate market is down 64%, and the Canada corporate market is down 88% year over year. So a lot of the stores were closed during this time. If you live in the United States, you know this was kind of the peak of the restricted living situation that was going on. So GNC is making note that doing the best they could. That 122% is off a very small number comparable to just the brick and mortar sales number. So don't those bars on the chart fool you in making you think that they've made up all of that lost sales. Now, talking about some of the joint ventures that they had, the first one is with what they're calling the Nutra JV, which is basically transferring the owned contract manufacturing business that GNC has had for as long as I could remember, and they actually sold that to International Vitamin Corporation. This was to generate cash for paying down some of the debt and also eliminating a lot of the costs within their business. GNC really looking to become a more asset-light business and get away from owning their own manufacturer. That limits a lot of the costs and overhead that they have to continue with. And they believe that they were going to have a good amount of synergies and cost savings and things that are going to be passed through this joint venture, making that move. Additionally, they had a joint venture in China with Harbin Pharmaceuticals. That is also their largest shareholder at this point and the owner of the stalking horse bid of $760 million. Something that kind of stands out, fiscal year 2019, 97% of that business went through e-commerce, only 3% went through retail. I don't necessarily think that 97.3 will continue, but I don't think you're going to have a ton of brick and mortar stores going to be popping up into Chinese market. Most of that market is used to buying supplements online. And I think that is something that makes a lot more sense for them to continue and make sure that they can continue to run a asset-light business. But I wouldn't be surprised if you did see some stores start to pop up over the next couple of years in China. They also just go on to talking about some of the innovation pipeline, different products that they're launching in the Chinese market. Also just a lot of unique strategies that are going on in China comparable to the United States. Chinese market is considered a gem in the nutritional supplement industry, and anybody that can wrap their arms around China and a lot of the Asian region will prove beneficial over the next decade. So now GNC is kind of moving into their strategic plan. They want to kind of talk a little bit around what their plans are here. First of all, talking about stabilizing the US retail business, talking about optimizing the store base here, just going over a little bit of the historical store performance. They have went through a full store optimization plan to making sure that they know where and which stores they need to close, and then just jumping into some of the projected store trends. Mall stores kind of being a big thing that they're no longer going to prioritize in GNC's go forward strategy to limit future exposure. They say that store sales have been declining rapidly in this channel, with the trend expected to continue in the future. Just getting a little bit more detail around the store counts right now at pre-optimization, that is before the Q2 of 2020, you are at 2666 in terms of the US corporate store count. that is expected to go down to 1,428. You could see some of the associated revenue numbers there, from $1.2 billion in revenue that those create down to 721. If you further drill that down into per store, you actually see that GNC is able to eliminate a lot of the lower performing stores, both from just an overall total revenue number and then also from like a same store percentage. And GNC saying at the 1,428 store count, that actually is going to give them at a positive same-store comp number for 2019, assuming that they did not have all of those other low-performing stores, the 1,238 that they plan on cutting. Similarly, in Canada, they have 159 of them pre-optimization. They expect to close 136 of them. That only leaves 23. So they're almost exiting the Canadian market. This takes some of the expectations and looking at this at a 2021 number and seeing that they expect, at least on the US side, 4.9% year-over-year growth, with another 50 stores that they plan on closing over 2021. And they believe that the US corporate business will start to stabilize in 2021 with those drastic cuts. Now, Canada is a little bit different picture. They're taking a much more aggressive store cut, but they do believe in 2021 that they will start to see a net profitability gain of 18.8%, but the business will not start to stabilize until the future. Now, this slide has been included into some other presentations you guys might have saw on my channel before. This is around the brand equity or the awareness of the GNC brand, comparing it to a lot of their competitors. And as you can see, the GNC brand performs extremely well at 79% of people that understand it, both from unaided and aided perspective. That is just below Walmart and just above Amazon. Now, not exactly sure how the study was done or any kind of specifics around there. I would say overall that the GNC brand is known, especially in the United States, and because of the long, rich history of this brand, it does have equity in the market still. Might have some fleeting equity in terms of the consumer basis that they would like to attract in the future, but I do believe that it has much more of a high brand awareness than Vitamin Shoppe or some of the specialty supplement retail brands that they list on this chart. And this kind of drills down into the GNC brand and specifically some of the sub-brand private labels. At the last quarter of 2020 that they reported, they did have 53% of their sales that came from GNC branded products. That is quite in line with over the last probably year and a half. And they did highlight some of their best performing GNC private labels. You have the GNC Amp, which is $137 million. 2019, you have the Beyond Raw, $123 million. The GNC Total Lean brand, $88 million. And then the Body Dynamics brand of $51 million. A lot of the commentary that I saw in terms of why the $760 million bid was off was focusing a lot around the private label business. At 53% of the business, that is right around $1 billion in sales. So saying if this turned into a private label CPG company and it would get the same multiples of some of the previous kind of legacy functional vitamins, minerals, and supplements or functional food and beverage companies, this puts a number that's much higher than that $760 million. But I think the difference between comparing it to something maybe like Slim Fast or maybe Atkins Nutritionals years ago is that the GNC brand sales are happening within the GNC store network. GNC obviously has a lot of incentives with their store associates to sell those products. They are trained very well on those private label products. And because of that, they're kind of controlled within an environment to sell those things. Now, if you were to put, a GNC product in a Walmart without GNC stores, would it still sell just as well? I think that it would sell great. I think definitely it would sell quite a few millions of dollars in a store chain like Walmart, but I don't believe it has the same sales velocity potential that it does within the GNC store network where they can control all the variables. Now, one of the things that does have potentially a lot of power to GNC, and I've talked about this on a number of different videos, is their My GNC reward program. They have around 10 million active loyalty members. of the total sales that happen at GNC, it's somewhere around 75 to 83% of the yearly sales happen with these loyalty members. In retail, a lot of times 20% of your customers make up 80% of your sales or profitable sales. And GNC is one that really proves that out. They have 1 million or so of the pro customers. These are paying customers. The rest of the $9 or so million are just a part of the free program. But those free programs provides them with the ability to market them in a number of different ways, start to drill down to a lot more personalized marketing, which could be improved in the future, kind of getting into the digital growth through some things like convenience and personalization. First of all, just kind of looking at the significant growth of the e-commerce channel over time. In 2017, GNC had $128 million, or 5% of their business was in e-commerce. Now, projected in 2020, you got 246, which is almost double. Then the next year, you're looking at $260 million, which I think actually is extremely conservative. I do understand that there was a large spike because of COVID-19 in terms of 2020, but I do believe that with the right momentum and the right focus, GNC will have a much stronger digital business. They just kind of further go into just 2020 right now and just kind of showing you, because of some of their restricted living situations, a lot of the e-commerce growth really aggressively shifted in an upward trajectory because of it. Some of the key growth initiatives on the digital side of GNC is, one, really focusing on the subscribe and save business, making sure they have that recurring revenue happening, especially with some of the vitamin categories and things that just are kind of on autopilot that people take day after day after day. And then they also want to really focus on their mobile traffic and making sure that they're optimized. They are getting the best conversion rates on the mobile site, because a lot of people at this point are shopping in terms of a mobile first and sometimes a mobile only perspective. They mention a number of different kind of ideas and things they want to kind of focus on digitally. For me, I think some of the biggest things to focus on here would be some of the text communications, also the buy online, pick up in store, which is extremely important for any omni-channel retailer, and then the ship direct from store, or what they call hyper local fulfillment, which could really improve a lot of GNC's online speed. Also, their costs to get those products to consumers. This is something that Target has done extremely well over the last, 2 years, and has really become the model for physical retailers to utilize their stores in a strong way. Now, I won't go too far into some of the cost savings initiatives. GNC is looking to cut upwards of $110 million of run rate cost savings from all perspectives of the business, from product to just getting the product to the stores, also to the customers. You have a lot of the wages or just overall store costs, some marketing costs, and a number of other indirect sales, general, administrative costs. Something that you will see GNC talk extensively about is their brand equity in international markets. GNC has been operating in international markets for a very long time. They see that there's a ton of potential overall, upwards of $145 billion in global supplement market opportunity. This is kind of an interesting slide because for me, I see a lot of investor decks a lot of times, and they'll always talk about how big the overall market is. And it's just one of those things to dangle a carrot. It's really just to hopefully distract you and not necessarily has any real value to the analysis. And then they go into, and this is very similar to a slide that was in one of their previous presentation decks, just kind of goes through some of their biggest, most important, their regions, and ones that also they think that they have a bigger opportunity. And they're saying they see $1 billion of retail sales by 2024. I think that's very ambitious. I've said that before. I think that there's a ton more competition in these countries. I think because of import taxes and tariffs and fees and a lot of things that are happening in each market, that is providing a much richer opportunity for local in-country brands to perform very well. I think with social media being as prominent as it does, a lot of these local in-country brands have the opportunity to see what's working in other markets. They get to be able to kind of mimic those things and kind of take it and iterate it from it and produce really great products and brands for their market that provides a stronger base of competition that was not there 5 or 10 years ago. The Chinese being an untapped opportunity, I do believe that this is something that GNC has the ability to gain. With Harbin Pharmaceutical's help, they can really tap into the Chinese market and provide themselves with a lot of sales. And I do believe it could be the number 2 market globally after the United States. I think it's going to take some time for the GNC brand to really grow within the Chinese market to, get some substantial revenue. But I do believe this is a huge opportunity, and them being partnered or then being owned by Harbin Pharmaceutical, I think there's a ton of opportunity and a ton of potential for GNC in the Chinese market. But right now, the COVID-19 type situation in international markets are restricting a lot of different things. And it's also not helping that the U.S. economy seems to be coming back stronger. The dollar is getting stronger. A lot of things from the international market perspective for supplement brands is not all that great for international expansion or growth. So right now it's kind of you're spinning in your wheels. There's not much opportunity out there. I mean, you can really set some plans in place and really start to laying a lot of the groundwork, but in terms of results, especially from a financial perspective, you're not going to have too much of that right now. And they're just kind of further just talking about what you're going to be seeing at least over the next year or two in terms of decline in business because of COVID-19. Next, GNC just kind of wants to cover like some historical financial performance. This isn't anything that is new that you guys wouldn't have seen over some of my other previous videos. Bar charts just overall going down in terms of revenue. In 2019, you did have an expansion in margin. A lot of that had to do with them managing their inventory a little bit better and some of the growth of their private label business. Kind of see some of just the breakout of the store within a store, some of the domestic franchise business, international franchise stores, company owned domestic stores, just kind of running you through some of those things so you can understand just how each one of the segments has performed historically. This is just kind of a snapshot here of like the current capitalization and liquidity. Just kind of a pretty picture here talking about how they've been able to significantly delever their business. GNC was extremely levered around 2016, 2017. A lot of the money that they took out in terms of debt was used to purchase shares. Hindsight 2020, that was not really a good decision, especially at the share price that they bought those back comparable to before the bankruptcy happened. You had under $1. If they could have saved all that money and then bought the stock at that point, I think we would have had a much different picture in front of them. GNC did provide some 2020 outlook, talking about some of the store closures causing declining sales to continue throughout 2020 and the lingering effects of COVID-19. They do see the Q3 and Q4 kind of rebounding in terms of the ability to generate net profitability. They see some of the sales start to come back up, but obviously a lot less than where it was at pre-COVID-19. Just kind of giving some further breakdown of some of the assumptions or expectations that are going to be here through 2020, 20 to 30% over the back half of 2020 in terms of a year-over-year perspective in sales on the domestic side. On the international side, you're going to see similar numbers down about 20%. China is going to be the only bright spot in terms of pretty similar numbers because of them being that they are really focused on e-commerce, and a lot of the lockdowns were not necessarily affecting any like physical stores. So they're still able to operate and still able to build out a lot of the plans that they have for the Chinese market. Do want to kind of touch on some of the e-commerce numbers here. They do see a 20 to 30% increase year over year. I think that number is going to be a lot higher than that. I think as long as they can kind of keep the communications going with consumers and in the market to let them know, hey, we're still in business, because a lot of times bankruptcy, people assume it is Chapter 7, where you're just going out of business, over a Chapter 11 where you're still in business. As long as you have a debtor in finance that you can continue to operate your business, or you have your own positive cash flows that can continue to keep operations going, you're still in business as you're restructuring your business. So GNC is going to need to make sure they communicate to consumers that maybe are a little bit confused on bankruptcy, meaning that they're out of business. So we'll see if the e-commerce number is higher than that, because I do believe that COVID-19 is going to linger a little bit longer, taking this one step further, GNC did talk about some of the sales recovery that's going to happen in 2021. They did make some key assumptions saying that the virus is going to end sometime or at least subside sometime in June of 2020, and there's going to be no real major kind of reemergence of the virus in 2021. They're also assuming that unemployment will continue to decline into 2021. So pretty positive, in line with what most economists are saying in terms of 2021. GNC expects a pretty strong recovery on their business, especially their e-commerce will continue to grow after the COVID-19 pandemic. So they believe there's going to be some stickiness to that behavior. But on the international side, they're kind of giving it a little bit longer of a runway in terms of what that recovery is going to be. Outside of China, they believe most of their markets will still decline in 2021. Giving some revenue projections on the 2020 and then 2021, they expect the revenue number of 2020 to be at $1.335 billion. That would be down about 35% from 2019, but they do see it increasing a little bit in 2021 to just about $1.4 billion. They also see EBITDA or net profitability essentially dropping to more than half this year, $266 million to $104 million. And then they see that kind of bouncing back up in 2021 to $169 million. This just kind of further just breaks out some projected financials. You have 2022 at a revenue of $1.46 billion, then 2023, $1.5 billion, 2024 at $1.6 billion. And you're seeing their assumption here is that same-store sales growth will move to a positive number in 2021 and on. 2021 definitely is going to have a positive number because the number in terms of what they're going to compare in 2020 is just going to be terrible, that anything's going to look great in 2021. But we'll see if they can have this 4% same-store comp number growth over 2022, 2023, and 2024. The last couple of years, they've been at a negative 3 or 4% comp number. And if you remember some of the slides before, they talked about how eliminating some of the low performing stores was going to create pretty much a flat same store comp number if they assume they got rid of all those. So for them to then increase those at 4% is pretty ambitious. You also see an EBITDA number that is going to increase over time, where 2024, they're seeing a number at close to where it was in 2019 of $172 million. And this is all assuming that they'll have a pretty similar profit number to where they were in 2019 at around 34% gross margin. And then also just kind of keeping capital expenditures $12 million a year. Similar to some of the slides before, they broke this down into segments. You're going to see that the store within a store concept is they're going to stay mostly where they're at. So they're not going to be eliminating a ton of these store within a store concepts that are in Rite Aid. I'm not exactly sure if that's the right plan, or I think Rite Aid's a unique kind of business in itself. It needs some help on its side. Maybe if they're sold to somebody like Amazon, which I predicted in a video just kind of for fun, and 5 businesses that I thought Amazon should buy. One of them was Rite Aid. So if that happens, that could be pretty unique in terms of keeping those store within a store concepts if Amazon would like that. You also see that the international franchise number continues to go up over the years. The only thing that kind of really subsides here is the company-owned US and Canada stores. So they're trying to, again, get rid of a lot of the costs. They want to be a asset-light business, and they're going to be moving towards focusing a lot of their attention on e-commerce, which you can kind of see over time how that's going to affect their same-store comp numbers. Now, in the current model, in terms of what I've just been talking about, there is some just overall assumptions that GNC had, and you can see how this kind of flows a little bit further in just kind of traditional financial statement. And then moving into cash flow statement, you could see that the EBITDA number will increase, and then also some of the free cash flow will be increased. Now, GNC did break down some opportunities and risks that they have here. We'll kind of just cover the risk first. COVID-19 relapses. That's something that all businesses need to be paying attention to right now. And regardless if it relapses or just that people are so fearful that they don't go out and operate like they did pre-COVID-19, that's something to pay attention to. Supply chain challenges, COVID or not, or tariffs, bunch of different things to kind of think about there on the supply chain. They see wholesale growth happening. That could be from franchises buying this at wholesale, and also a lot of their merchandising being put into different retailing merchandising sets through their outside the four-wall retail strategic partnership plan. They also assume that there'll be a viable international and domestic franchisee market that are interested in the GNC model. If that doesn't happen, that's a potential huge risk for them. Now, opportunities here, there's a ton of margin they believe they can gain, especially with the International Vitamin Corporation JV. They can create synergies and things with that joint venture. They think the ability to transfer a good amount of the closed store revenue, so capturing a lot of the lost revenue and keeping it within the GNC network. International e-commerce growth should be something that could be big. They might need to build out some of those resources in-house to make sure that they can run direct-to-consumer or e-commerce channels within each particular country over having some of their distributors run that. International supplement distributors have been slow to adopt some of the e-commerce channels. Some of the hyper local fulfillment and then buy online, pick up at store is going to be a huge potential for them. I think that's something to really focus on for GNC. They need to build out a stronger omni-channel retailer, and then store openings is an opportunity. I would stay away from store openings if I was GNC. That really got them in trouble the first time. But I think if you open up the right stores at the right time in the markets that you need to provide a better network of small micro shipping points and things like that, I think it makes sense. But there hasn't been a great management of that over the years where they just kind of get bloated really quickly. Now, as you guys can see from that presentation deck, some of my commentary, the vitamins, minerals, supplement specialty retailer has laid out a strong argument for why they believe this GNC 2.0 transformation will be successful. GNC continues to, and honestly has always kind of been, extremely positive towards like the outward investor communications, but it's rarely ever matched that positivity in results that meet or exceed the expectations that they set for itself. I believe life as GNC 2.0 will be tougher than they describe in the document, and they will need to break the chain of innovation to parity to really meet their lofty expectations. Don't get me wrong, GNC 2.0 will definitely be better than GNC 1.0, but for it to be successful, it will need to quickly shift itself to GNC 3.0 to get ahead of the larger omni-channel retailers that now own this vitamins, minerals, and supplements category when GNC 1.0 was sleeping at the wheel. Thank you so much for watching this video. If you want to help support me, make sure you guys hit that thumbs up button on this video. If this is the first time you've been introduced to my videos, would love for you guys to be a part of my community by subscribing to my channel. I upload several videos just like this weekly. And if you guys want to connect further outside of this platform, I do include all of my social media links down below. I just want to thank you guys again for your time. Hopefully I gave you some value in return, and we'll see you guys on the next video.